Hello, welcome to the panel, Disrupting Sustainable Finance Through Innovation. We're here to address the integration of sustainability in the finance sector and the use of finance to create change and enable solutions to address issues like climate change and biodiversity loss. My name is Katherine Foster. I'm the new Executive Director of the Green Digital Finance Alliance. Today I'm joined by a panel of experts, including Mathilde Nordby, Head of Partnerships at RepRisk, Holger Schmid, Chair of the Board of NatureFinance, Ross Brooks, Investment Director of Katapult Ocean, and our panelists will highlight key frameworks, products, and methodologies and tools to increase better risk management, to protect ecosystems, and to help the financial sector align with sustainability goals. We will also discuss partnerships in the finance sector, new developments, and how technology is being leveraged for sustainability and to preserve the ecosystem. This covers many elements and many actors and initiatives and approaches, so I'm really pleased that we have experts here. I want to start with brief introductions, and as moderator, I'll introduce just a little bit about my background because I do not come from a financial background. I had an early career as a diplomat on climate and human security, and then served in the European innovation ecosystem, including as the Swiss lead and then land use pillar lead for the EU's Climate Kick, the largest climate innovation partnership and accelerator in the world. And for the past 6 years, I've been building out startups, pilots, and frameworks ranging from the World Bank blockchain carbon markets pilot to emerging tech for climate, natural capital, and oceans. I serve on a number of boards, including the European Securities Market Authority Financial Innovation Working Group and the Capitals Coalition Commission. I'm thrilled to be rejoining GDFA as Executive Director. And GDFA, Green Digital Finance Alliance, is a Swiss-based not-for-profit launched at the WEF in 2017 by UNEP and Ant Financial. We serve as a catalyst of next-generation green digital finance, and with a global ecosystem of international agencies, philanthropic organizations, and corporate actors, we co-create global thought leadership, open tools and frameworks, and market-led demonstrations. But enough about that. I want to now move to our panelists and ask them to equally provide a 2-minute introduction of themselves and their organizations. And I'll start with Jenny.
Thank you very much. Sorry, I had a problem getting the unmute button up. Thank you very much for your opportunity to speak to you all today, and to my fellow speakers and moderator who has all come in with a very interesting angle before today's discussion. I think the topic of emerging technologies and innovations to enhance financing and sustainable development is very timely. But first of all, let me introduce myself. I'm Jenny Nordby, and I'm Head of Partnership at RepRisk. We are a global ESG data and technology company headquartered in Zurich, Switzerland. In this role, I'm responsible for a global team that oversees over 40 strategic partners and redistribution channels. We have over 15 years of experience as an ESG service provider in the financial industry, and building on our long experience in this ESG space, we now increasingly partner with other service providers to support the development of new and innovative ESG solutions to our common client audience. Making sure financial institutions and corporates have the right ESG data to make the right decisions with the right tools at the right time. We believe the industry-wide innovation starts with cross-collaboration and even co-opetition to address these time-sensitive topics with shared resources, technology, and expertise. So I'm very thrilled to be on this panel. As an impact framework, the SDGs guide and recognize positive change in the world. And the SDGs 14 and 15 are particularly relevant to biodiversity, an area that we believe is particularly key to address with a system-wide lens, and which I will get into a bit more detail on a later part of this panel. When it comes to SDGs, as they are inherently focused on positive contributions and impact, I think it's important that we identify reverse progress or risk of harm in other areas to really be able to achieve net impact. And what I mean by that is to provide tools and data needed to enable transparency on company-linked activities, which may on one hand be positive and show proactive actions aligned with the SDGs, but in other parts of the value chain, the same companies may have larger negative contributions. Being able to gauge this gap is important for financial decision makers, because how...
Oops.
I think Jenny's on mute.
Approaches.
Thank you, Jenny, very much. Apologies, I think you went on mute for a moment, and we will start the discussion on SDGs in just a minute. I did want to just quickly bring in Holger, Schmid, and Ross Brooks to give them a brief introduction of themselves and their organizations, their background, and what the organizations do. So I'd like for Holger to now tell us about himself and about NatureFinance.
Thank you, Katherine, and hello, everyone, and pleasure to be here. I'm here today as the chair of the board of NatureFinance. So NatureFinance is a new organization that was just launched last week in Geneva and has a mission to align global financial flows with nature positive and equitable outcomes. It's not a completely new organization. It actually builds on 3 years of activities of the Finance for Biodiversity initiative. So if you know the Finance for Biodiversity initiative, now it's NatureFinance. And it builds on 3 years on very successful work in different areas that will continue, which is basically financial innovation as to the financial industry, but also financial innovation when it comes to the regulation and the frameworks around. NatureFinance also, over time, will provide much more services and support to the financial community to apply this innovative thinking. And in an emerging space where we actually see nature being much more recognized in finance, there's also work on how the entire market around nature products and how we trade nature in financial systems can be governed and regulated. So with that, pleasure to be here, and looking forward to the discussion.
Thank you, Holger. Now, I'd like to turn to Ross Brooks to introduce himself and Katapult Ocean.
Thank you, Katherine. And great to be here. Thanks so much for the invitation. Super interesting topic to get our teeth into. My name is Ross Brooks, Investment Director at Katapult Ocean. Katapult Ocean is an Oslo-based investment fund manager focusing on early stage venture, seed to pre-Series A. We're an impact investor, so we're focusing on solving the challenges faced by the ocean in terms of biodiversity and climate, whilst generating returns to our private investors. We've been doing this for the last 4 years or so. We've invested into 52 companies, all impact orientated, who are performing well financially. And we're really trying to showcase this new kind of industrial category of impact investing, which hasn't really been explored before outside of maritime aquaculture and some much more traditional industries. I'm an economist by training. Have always been very, very preoccupied by natural capital and social capital and how we can bring that into the real economy and incorporate it in price. I think there are two sides to that coin. One side is on measurability with regard to impact, and the other side is on point of sale information. So how do we capture the right information and present that at the point of sale to internalize externalities? And I think where we are now in the impact investment space is right on that nexus. So consumers being increasingly aware of their contribution by what they purchase, and investors starting to see this as a real value investment over time to build strategies which work for environment and for financiers. Thank you very much for having me.
Great. Thank you all very much. I think we've already pointed to a number of key elements that we want to have a discussion about, everything from risk and data and regulation and frameworks and innovation and investment. But let's start with the SDGs themselves to set the foundation for our discussions, because the UN and global community has been developing and negotiating sustainable development frameworks and climate frameworks for 30 years. But 2015 was a key pivoting point with the Paris Agreement and the new Sustainable Development Framework of 17 goals, including SDG 13, climate, and today's focus of SDG 14 and 15, which can be summed up as life before water and life on land. But the SDGs were established as an impact framework to set and guide national progress towards sustainability that have been adopted as specific targets and reporting frameworks for corporate and industry. And this part is really interesting to me in how finance institutions can help achieve these. So I would be grateful if we could start back with Jenny, because you started diving into how your organization is enabling this and what, and talk about also what innovation products and tools and frameworks you're leveraging or developing.
Thank you very much. I appreciate that I might have gotten a little bit of an interruption in my intro here. But coming back to your question around the SDGs, I think these have been pivotal frameworks to guide direction. It helps us also align on where we're heading and where we want to be. And then the rest has to follow as to having the right tools, understanding the use cases so these can be effectively deployed. But I'd like to kind of take a step back and think about the overarching goals itself and the ways that we achieve it, because it's very easy to end up with a discussion around impact as just about positives. As a ESG risk data company, we obviously has an interest to bring to light other types of activities that also reverse progress. So today, what I would like to focus a little bit on is the wider industry's goals of bringing together solutions that are addressing different needs. We've seen a ton of innovation in the market today, but we also are seeing the need for decision makers to come closer to service providers to be able to effectively address where there are still gaps. Because I still think there are some gaps, and I think that the industry overall is struggling a little bit to find those answers to move towards net progress. And as I mentioned, one of the areas of the SDGs 14 and 15 in particular leads us towards, I think, biodiversity as an extension maybe of today's climate discussion. One of the challenges I think we have in today's world is to measure biodiversity is slightly different. We don't have an equivalent metric like carbon dioxide. And I think so far the discussion have been very much driven by the current narrative. Right now, what we've seen is companies and government bodies like the ECB really taking a stance and saying that biodiversity risk or natural capital risk is macroeconomic risk, so a systemic risk. And together with that, it helps us as service providers to really have a clear idea of what's going to come and what's going to be the requirements that companies are going to be to face. It's important that we have that clarity, because only this way we are going to get the commitments also from the market to invest in these resources. And only together, I think, between industry collaboration, we're able to develop something that's useful, which is value added, so that the commitments are really feeling or being seen as real payouts. I don't know if I have some time to show some statistics on the screen, but I think this is an area that I would like to dive a bit.
Oh, okay. I guess we can do that now if you like.
So what we see here is really the staggering statistics about the market. Over 73% of all extractive sector projects are within 30 kilometers or less of proximity of an environmentally sensitive site. 73%, this itself puts biodiversity at risk and illustrates how vulnerable the market is to the systemic risk. What we see is also recent innovation in the market, moving from traditional sentiment data to sensing data. And I think the area of proximity data has helped us now illuminate some of this risks better before. And that's a key step for financial decision makers. Nature-related risks, including those who are associated by biodiversity loss, is currently the area that I believe the market has to focus on, because ultimately safeguarding long-term financial security and safeguarding biodiversity is one of the same. So I'd like to leave it also up to come to some of my counterparts to perhaps come with some inputs from their position. And Katherine, maybe you have some inputs.
Yeah, great. Thank you for sharing that. It's interesting because when we think about coming back to the SDGs, with the 17 goals and the 169 targets and 244 indicators, 93 of which are environment related, and yet the data that we have available for that, for those, has been quite limited until now. So I think it's really important to stress the type of innovation that you're bringing forward, both for, as you say, for those positive actions as well as for the risk actions. But I wanted to let the other two please jump in on any points about some of the elements that Jenny's addressed here.
I have a very brief input on the SDGs, which I think are a great starting point and a great starting framework. But I think they need to be maybe grouped in a way which reflects the systemic nature of the SDGs. And just as an example of that, we're out raising funds these days, and talking to an institutional investor who says, "Yeah, we have a lot of clients who are interested in climate, but you're doing ocean." And I feel like saying, where do you think the ocean? Where do you think the climate comes from? It's a huge contributor, and this kind of categorization in our minds about division between SDGs and a way to allocate capital, for example, is sometimes very unhelpful. So I think greater awareness of the systemic integration of the SDGs is a must going forward.
Oh, thank you, Ross. Yes, and I'd like to come back to some of those points. We're going to do a little deep dive on each of the panelists now, but let's continue that initial introductory discussion about the SDGs. And Holger, I wanted to come back to you to discuss your approach, because you've also been focusing on partnerships, which has been a really big part of sort of building out the tools and frameworks in this. And I wondered if you could just give us some of the reflections about your work there, and what innovative products, tools, and frameworks you've seen in this space.
Sure, thanks. So maybe just a quick remark back to the SDG. Just because I cannot hold back, I think, on it. And as a framework, very useful. But the way we even discuss it right now is that the ESG is our delivery mechanism to achieve those. I think that's the wrong approach. And that has proven to be the wrong one. Now that we see that half of global financial capital apparently is aligned with ESG, and we see the state of the earth, then I think that's self-evident that this just cannot work. So I think we need to somehow, there we come into the innovative part, just go about the business differently. We have to design from the very beginning, not for a single economic financial return, but for multiple return that has to be nature or environment and the social return. So it's not we do economic business and then do ESG at the side, even if we can do it better and better all the time with the available data and information, but it's a fundamental design challenge from the very beginning. So probably I've used up now my time on that, but maybe I'll leave it there.
No, not at all. In fact, I wanted to come back to you, and then we'll go, of course, we'll return to Jenny and then to Ross for his sort of presentation. But I wanted to talk about some of the new approaches that you've been supporting and also developing. Now, you've talked about, SDGs as sort of the compass. We've talked about it as the compass. But in terms of the frameworks as roadmaps, and how these will encourage innovation, perhaps you can give us some insights onto that beyond just a mindset that is more holistic about that social and environmental return, not just financial return and ESG. Let's talk a little bit more deeply about the frameworks and the tools.
Yeah, okay, so the frameworks, I mean, it will maybe come up later. What we see as emerging frameworks out there for finance is certainly, and related to nature, the task force on nature-related financial disclosures. I mean, that's a framework emerging with the involvement of the financial community, and I think that makes it very, very strong. It's market-based, but still it gives actually a community of practice from the very beginning that can shape the market. At the same time, I think we see other pieces in actually more in regulation emerging, and I just want to point the European regulation with more stringent reporting requirement is often named. Another one that one doesn't hear too often is the International Sustainability Standards Board, I think. And I think that's quite an interesting body that comes together to set the standards on how the financial community reports on always more complicated and complex way, and also a very greenwashed way of reporting on environmental engagements. And with that, then I come maybe back to a market mechanism that comes out of NatureFinance as one actor in that space, or as a contribution of NatureFinance. These are performance-linked bonds. I mean, and they have been around for some time, so it's not completely new, but haven't been surfaced enough and applied. And lately, there's more discussion on especially nature performance and climate performance bonds. And they are just a recent launch of the sustainability-linked sovereign bond hub is a case in point that there's more appetite out there to link actually financial investment with concrete performance-based indicators. So
that's interesting. So what we're seeing is, in fact, regulation can support and actually be an impetus to innovation. As particularly, I think Europe is often upheld as sort of a leader in that type of impetus, but there are market mechanisms that also can be leading in the way. To me, this also speaks to the digital elements and the innovation there. GDFA, one of the first projects I was involved with in 2019 was digital green bonds. And I'm currently also working with the Bank of International Settlement on retail digital green bonds. So what we're seeing is, a real amalgamation of not only sort of the paving of the opening of the policy side, but also in terms of the innovation side aligned with the tech side and the data, as well as the need for collaboration in this space. And perhaps you could just give us a final point about the need and the mechanisms for collaboration.
Is it still back to me? Sorry.
Yes, absolutely.
Yeah, well, fundamentally, so in another part of my life, I'm with the MAVA Foundation, and we have been funding quite some work over the last years in that space. And we have built our last years of work entirely on collaboration. So bringing different organizations, different fields together. And that has been proven very successful if you do it smartly and loosely, and do it with the right willingness, but also ingenuity to form something where the space is opening up and you can actually form impactful, very concrete collaborations that can deliver concrete products, for example, or changes. So I would say that there's no clear framework how you do collaborations most effectively, but the openness to reach out to all parties to find solutions and not to discuss anymore, should we do it or not? I think we have passed that time, because in all the critical global issues, we should not discuss anymore whether or not, but how and how to do it best. So.
Thanks. And actually, SDG 17 is partnerships, and it is sort of the word that we hear the most. It's a trope, partnerships, collaboration, but building up the capacity and the tools and the means, the mechanisms for that to happen in a meaningful way, so we're not constantly reinventing the wheel, is, I think, a really important step. So thank you very much. And I think this also goes to something that Ross is going to discuss, sort of the almost the contrary to this, the venture capital side, the culture of impact innovation. So I'd like to move now actually to Ross to talk a little bit more about, as a VC, what innovations are you seeing in ocean protection and the trends there for the financial industry, and also talk about the venture capital culture and whether there is room for collaboration there.
Thanks, Katherine. I don't think we are counter to anything that Holger has mentioned as an industry, but I would also like to take another angle on this, on the collaboration side, and maybe speak a little bit about community. And I think this is very, very relevant to getting the right data, including the right stakeholders in new biodiversity monitoring and protection. And I think if we can include, for example, retail investors, communities in affected areas in these debt structures, we can bring alignment And I think that's a very, very powerful tool, perhaps one of the most powerful tools we have at our disposal to steward and manage natural capital. Maybe a good example I can start with is just from our portfolio in terms of technology. We've invested into a couple of companies, Atlan Space, which uses drones to identify illegal fishing vessels, and Aqua Ocean, which is a autonomous hydrogen-powered surface vessel. So they can monitor MPAs, most of which just now are on paper with no surveillance really or action as deterrency. If we can, for example, tie in sponsored surveillance and monitoring on MPAs with sovereign financing and tie in also local communities and fisheries, we can start to create an ecosystem where we know the biodiversity yield and the productivity increase of an MPA from the catch, and it's providing a yield back to the government. So this is the kind of technology and measurement nexus with community and new financial instruments, which I think is, I think that's the solution, personally. But anyway, maybe just to talk a little bit about the venture industry and backing these things. These are deep tech companies. They're hardware intensive, and they're operating in one of the most difficult areas or difficult environments on the planet, i.e. the ocean. Any engineer will tell you that it's hard to push things into the ocean. It's hard to maintain them, and it's costly. And this typically is a no-no when it comes to conventional venture capital. Where we're getting to now, though, is that these challenges are solvable with technology, and they're also a necessity to solve. The ocean covers 70% of the world's surface. There's a lot of space to build out renewable infrastructure. It's a huge resource, and we need to be capitalizing on that in a sustainable way. I think one of the problems I see with a conventional fund strategy for venture is that they typically are 10 years long. They might have a 5 to 7 year divestment period. And it's not necessarily long enough to invest in deep tech companies, especially when they're playing into markets or entirely new markets like natural capital. So I guess the solutions there are around how do we make natural capital more tangible, i.e. impact commodification and new markets for carbon biodiversity, or maybe some kind of concessionary instruments to give a quicker return or a higher return in the intermediate term before the inevitable long-term excessive returns, which I believe this will generate. I don't want to rant on. I'll pause there, Katherine.
No, I'm reflecting on so many interesting points that you're bringing. Also reflecting on practical experience. One of the initiatives that I've recently been working on was on bunker fuel traceability and using DNA testing, for example. But on the flip side of that, of the high tech, deep tech, is something that you mentioned, which is the community and local knowledge. So the new forms of data that we're able to integrate and aggregate into these mechanisms, which I think is really important, especially from the natural capital side. So I really think that that's interesting. And coming back to, the investable side of it, how we're going to make natural capital more tangible, more investable, and also perhaps shifting the expectations on return on investment, and also the models of innovation, because you can have competition, as Jenny said, as well as collaboration. So I think hybrid business models are also a key element here. So, and on that note, I'd love to come back to Jenny then to talk about some of the key points that she raised when she talked about the data that she's been aggregating, but also the model of innovation that they're pursuing.
Thank you. Yeah, first of all, I would like to say that there's so many interesting angles coming into this. We're talking about performance and accountability. We're talking about the topic of passiveness. Should we do it or not? That's the dangerous concept. Like if we end up there, we're not moving anywhere. So I think the thing that we have to look at more, not look away, it has to underpin all of that. And as an ESG provider, we're trying to move the information boundaries. So we're trying to ensure that whatever our clients are looking to be able to measure, to take action on, it's actually possible to extract. And going back a little bit to what I initially talked about around biodiversity, which is an area that we are exploring more because there's actually possibility to bring in more hard facts and more evidence-based approaches. we're looking at the World Economic Forum statistics, approximately $44 trillion or more than half of the world's GDP, is either moderately or highly reliant on nature. And there's mounting pressure to have more disclosure around biodiversity-related dependencies and impacts. But how can you really enable that? Because nature doesn't disclose anything, at least that I'm aware of, like you recognize from an annual reports, but it leaves a trail of evidence that should trigger a call to action. So even if we don't have maybe the perfect solution today, I'm very pleased to see that through collaboration with different initiatives, through government initiatives, NGOs, but also co-opetition increasingly, we have recognized as an industry that that's the only way to address more time-sensitive issues like the one I just mentioned. And on our side, what we've done is we have partnered with an alliance like IBAT, Global Data, and currently launching our geospatial data offering. So we're really moving from traditional sentiment and text analysis to more sensing data to enable to extract information such as, is there a project, an infrastructure piece close to an environmentally sensitive area or...
Oh, I think Jenny's gone mute again.
Sorry?
Could you just repeat the last 20 seconds of what you were saying?
I'm really sorry, I went on mute. So I was just mentioning that we are together with alliances and other industry initiatives, like we've done recently with Global Data and IBAT, we're launching our geospatial data offering, which is an offering intended to address that concerns, that you cannot measure if a pipeline or a mine is close to a key sensitive area, like an environmental sensitive area or a key biodiversity area. And this helps us now identify and illuminate this risk so that we can actually tell a bank or an investor or a project owner where is those assets and where are they close to key sensitive areas and how can you address it. This wasn't easy before, but it has been enabled because we brought the industry together and we looked at where can we complement and drive those synergies. And that's really my call to action to the industry, is to continue enhancing those collaboration models and to not look away, but look at more.
It's interesting because I think you've taken what I would call sort of a demonstrator approach, because you're managing to create these frameworks, aggregate data and provide this input, the proximity levels, for example, as you're saying, for oil and gas and mining. That is really an advancement in the approach. And I'm wondering how you achieve that feedback from the clients, and what is the model? Can you speak a little bit more about the details of that and how you're garnering that feedback mechanism and loop?
Yeah, I mean, the short answer to that is that it takes a little bit of commitment from our audience. So you have to find a way to both incentivize these feedback loops and commitments from companies that have many competing priorities and probably a strategic roadmap that could be more short term. But I think that there's increasing recognition that if we can build things together, the deployment of these tools and the value add in day-to-day decision making is going to be much more prominent. So we built a dialogue, I think, early on, asking our clients, what's keeping you up at night? How are you going to meet those future requirements? And the answer in many cases we're not sure. And so it takes a little bit of openness and transparency from both parties to say that we don't have all the answers right now. But I think we identified a few key ambassadors in our client audience, but also some that we maybe saw as more critical, who could help us stay on track, and maybe who were maybe not fully on board from the beginning, but who were able to give us this critical and constructive feedback. So a joint initiative, I think, means you have to ask for commitment early on, but you also have to make sure that there's a benefit attached to that. Maybe it means that you're offering some of this data for a short period of time free, or to be able to build in that knowledge from the client. And then I think it's pretty clear, if people see the value, they will be willing to commit. So it's also about illuminating the value to your audience early on.
That's great. I mean, that's very similar to, I've been asked to also reflect on some of the GDFA initiatives. And that's all very similar to some of the consortia-based projects and classifications and frameworks that we've built out and, we've done the Green FinTech classification, we've done report on ocean disclosure in the NASDAQ Nordic listed companies. And FinTech for biodiversity landscape, and the Task Force on Nature Markets reports and biodiversity. And it has usually come from the impetus of one of the partners, and usually an industry partner and or a philanthropic partner. So it's really interesting to see how the impetus for some of these is actually coming from that demand side, but the frameworks are then can be iterated and used universally. And here I'm talking more about the mechanisms that we're building out, but I can see how that also works within that sort of innovation landscape that you're building out.
Yeah, I think absolutely that's the case. I think as the industry also starts to maybe adapt a little bit more of a standardized approach to understanding the same topics through the same lens, we're also speaking a bit more the language maybe than before, where the information boundaries or the conceptual capacity was somehow limited. But bringing in the skills and the knowledge and the education side also from academia has helped us also bring in new know-how and transpose that between both the data buyers, but also us who sit on the service side.
Great, thank you. Oh, you've gone on mute again. I'm going to turn to Ross then to reflect too, because you must have seen similar innovative business models as well as the actual capacities being built out under your umbrella.
So I think just to give a bit of an overview of what we're investing into, we're not kind of a typical venture player. I don't think we're not just doing software or enterprise SaaS. We're looking at the hard stuff. We're doing offshore floating solar. We're doing offshore anchoring for deep sea wind. Desalination, algae. So I don't know about new business models, but maybe new fields. I think in terms of the financing of these types of businesses, many of these hardware-intensive, almost infrastructure-like projects with very strong IP, they tend to be quite expensive to finance up to the point of demonstration. But then you're able to sign offtake agreements and scale very quickly. With debt financing, for example. So I don't know if it's not an innovative way to grow a business, but I think it's an interesting characteristic of the asset class. I think some of the gaps that we're seeing in terms of these more infrastructure-like projects, this could be energy, but also in seaweed biorefinery, for example. Even when companies are getting to the point of financing a demonstrator, the project debt isn't there. So these big infrastructure players, they want to have much larger projects before it becomes interesting, even if there are offtake agreements at small scale. So I think that's one interesting reflection around disrupting sustainable finance through innovation. How do we plug these holes in terms of almost venture infrastructure without paying venture debt interest rates to bring these solutions online quicker?
Great. Actually, thank you very much. I think that it really speaks to the level and breadth of the initiatives that you're actually funding, the very technically broad and deep infrastructure that you're creating. So that really speaks to the level of commitment I think we're seeing growing. I wanted to come back to Holger on some other types of funding mechanisms, the market mechanisms. Perhaps talk a little bit more about the bond side of things and how we're seeing that having emerged from the initial green bonds framework just about a decade ago, and sort of the advancements on that type of market mechanism.
Yeah. So as I said, I think the latest innovation, or what hopefully becomes more and more standard, is that we look at performance and key indicators, and that we do less concessional funding or lending, but actually give the debtor much more space, how they can use that the the funding available. So in the case of the emerging debt crisis, governments do need funding. They do need funding to address social challenges for political reasons, for social peace, for everything. But at the same time, we as a creditor has the interest to perform against nature and global well-being, and the global Earth well-being. So I think this is kind of a sweet spot, isn't it? It actually, debtors have the fiscal space to do what they need to do in country for social welfare, social stability, political stability, while delivering on global common goods. So, and moving that much further beyond what was, as you said, green bonds, loosely defined, individually reported, no great standards, I think is great. And then in combination with what Jenny said, and also what Ross is investing in, data that becomes, at that point, in that moment of time where so much data becomes accessible on time and at affordable price, I would say, and where you can integrate that, and it becomes actually a measurable form. You can start measuring things objectively, and I think that's a very important innovation itself.
Great, I agree. And also what Ross was indicating previously, now the new capacities to bring in, the capitals framework as well, and being able to bring in other types of inputs and information as data is really advancing. I also see a number of initiatives that, including the CAMDA data framework that's looking at the structure of data, standard setting, etc., sort of a collaborative global ecosystems around data themselves that I hope is really advancing all of our work. I wanted to now just take a minute or two each to sort of drop any points that you feel we haven't really addressed, and also to tell us what you think, what is your one big wish, what you would really like to see to accelerate change in the industry. And I guess we can start with Jenny.
Well, this is the million.
Jenny, you're on mute again.
I seem to have an issue with the sound.
Okay, let's go to Holger just to tell us about any things we've missed, or any one big wish, with $1 million question for you.
Yeah. So maybe coming back on something that was said before on the World Economic Forum's report on how much of the global economy is dependent on nature. And I think any figure out there that is less than 100% is probably the wrong one. There can't be 50% dependent on nature. So if there isn't any nature, what do we still do with the remaining 50%? I mean, it's just more a question of how directly related to nature or not, but it's 100%. And for that reason, we have to make nature much more apparent in our global market, in the way we do finance, and make it much more explicit. And basically, so my wish today is that we see our global market and economy, it's a nature economy. It's a nature market. We trade nature in the one or the other form, more implicit or explicit, directly, indirectly. And we have to give it a price, and we have to give it the right price. And that's the system we have to solve for quickly.
Oh, thank you. Did you have a question or comment for any of the other panelists before we move to the next person?
No.
All right. Great. Jenny, let's come back to you. Sorry, we seem to be having just a slight technical issue with your mic from time to time, but I think you were in the middle of a very good statement. I'd like to come back to you to try again.
Is it still not back?
There we go.
Okay, great. So no, apologies for that. I seem to have some issues with my tech here. But I think I would like to go back again to this point around performance and accountability. As been said many times, this is the only way that's going to drive incentives, and incentives is what's going to drive actions. It's pretty easy human behavior, I think, and also collectively, that's going to help us. I think also there's a clear connection with what we see with new frameworks like the TNFD, the GBF, which is clearly supporting innovation in ESG and sustainable finance solutions. They're essentially stepping stones, and now we have the work ahead of us. And I would like to underscore that starting now doesn't mean that we're ahead of the curve. So one wish from my side would be that you really start accelerating decision-making and not to be immobilized by the enormity of the task before us. As I mentioned, we need to look at more, not look away. And I'd like to say that the good news is that we have roadmaps, we have already pretty good data, we have somewhat of a clarity on use cases, but we have to make it actionable. And that means service providers like ourselves have to listen to the audience and work together. And I would like to say that I also agree with the GDFA statement that the most impactful benefits that will allow for scaling are yet to be realized. But I'm pretty optimistic that we have come to this awareness that we maybe didn't see a few years ago. So fostering this transparency is what we have to continue to do. And then I think we're on the right track.
Great. And I think with organizations like those here today, we're well on our way. I also wanted to give you the opportunity to ask any questions to your fellow panelists or to draw upon any other key point before we move to Ross. No? Okay. Ross, I think we'll come back to you to give us your $1 million question and to reiterate any key points or facts that you think we may have not addressed fully or as much as we should and emphasize here today while we have this incredible ecosystem here.
Thank you. I guess to reiterate, the ocean is really big. It's 99.9% of the livable space on the planet. So let's not ignore it as a solution to this climate and resource challenges. I can't shout that loudly enough, I don't think. And the ocean has been historically and currently is massively underfunded as a source of natural capital and industry, in fact. I think my ask is a simple one, or my solution is a simple one. That would be more accurate appraisal of catastrophic risk arising from climate and biodiversity collapse. I think if we are better at pricing in risk of companies doing bad in terms of insurance premiums, financing risk, consumers not buying products anymore, then we won't invest in anything but stuff which is good, whatever good means. And all these frameworks and monitoring solutions we're talking about here today will help to categorize that. I still don't quite understand why this risk isn't appreciated yet in financial markets, but hopefully measurement will really change the cost of capital going forward.
Oh, thank you very much. To me, this speaks, when I reflect on the SDGs and on innovation, especially after the last 30 years, having come from sort of the environmental science background into diplomacy and then through innovation and then back into emerging tech and now into the finance industry, I have a very lateral perspective. And sometimes it seems that we've moved very slow, especially under climate and the SDGs. And other times I'm reflecting on some of the innovations that we've managed to support or to help create over the years. And I'm really amazed at the advancement. So if I look at Climate Kick and the Oasis Hub, which started as just a small little initiative that has grown to a global framework and database, I think there is hope. There is great hope. And more than hope, there is talented people willing and ready to come together, not in different models and different approaches to actually make this happen. And one thing I wanted to flag from the GDFA is that not only is our ecosystem building out, different tools and mechanisms similar or amplifying or collaborating on those that you've sort of mentioned today, we also have the Every Action Counts Coalition, where you have big platforms and small platforms around the world, fintech platforms and financial platforms that are also using those to help with consumer incentivization and change. And to me, this speaks to that layering up of approaches to ensure that we're addressing climate and the SDGs, and particularly for nature and oceans, which, let's face it, are the heart of our economic system. So thank you very much for joining us today. I really enjoyed this conversation, and I hope we keep it going and it turns from conversation into even more action.
Thank you very much.
Thank you very much, everyone.